So I don't really focus on long-term passive investing on this channel. Mostly what I talk about is actively trading, and especially actively trading with options. That's what I am. I'm a trader, right? I'm not really interested in long-term passively investing, at least not with all of my money. I have some long-term investments. I do have some long shares of some market ETFs. In the past, I have sat on various cryptocurrencies and other assets. I think most of us are like that, even those of us that consider ourselves active traders. Most of us probably have 401k accounts or IRA accounts, some kind of retirement account, or even in your trading account, you're probably sitting on some shares of a market ETF like SPY or QQQ. And I've had people ask me questions about, if they can't be an active trader, because there are many people that watch my content and they're like, hey, I can't actively trade the stock market. I work during stock market hours, or I'm just not interested in trying to learn how to do complicated stuff like trading options and futures and things like that. Can I just be a long-term passive investor? And specifically, the question I often get is, can I just put all of my money into SPY? Because we know the S&P 500 historically, it tends to average about 10% gains annually. And that is a really fantastic return. It's a very safe kind of investment, right? But people often ask, hey, should I just put all of my money into SPY? Because isn't that safe? Isn't it diversified? It's 500 different stocks. Am I okay doing that? And, I wanted to address this today because, I'm not a financial advisor, and I certainly would never tell people, yes, this is absolutely the right thing to do or the wrong thing to do, but I do want to give you some information, and I might play a little bit of devil's advocate on this one. So if you read information about investing, passive investing, especially information from like the 1970s, 1980s, even into the 1990s, a lot of people did recommend that, for your passive investments, that you split things up, that you weren't solely invested in the US market. In this case, SPY, it's a US market, right? Well, the world is very different now. I would say the US market is actually a global market. Everybody from around the world trades the US market. So, but that was not necessarily the case in the 1970s, 1980s. A lot of times financial advisors advise people to have their investments usually split into a 3-fund portfolio, or sometimes a 4-fund portfolio, where you would have some shares in something like SPY, a US market ETF, and then you have shares in an emerging market ETF, right? The non-US markets. And then maybe you'd have also a commodity ETF, maybe bonds, invest in some bonds, maybe invest in small cap stocks, a little bit as well, maybe do various sector ETFs. You have some fingers in different pies, right? But these days, I really think SPY, in my opinion, is perfectly safe, as if that's the only thing you have your money in, like the one investment. I think SPY is perfectly fine. It's 500 stocks. Again, you don't need to worry about emerging markets anymore as far as trying to capture the entire global market. The US market is the global market. So again, I think a lot of that kind of thinking, like the 3-fund portfolio and the 4-fund portfolio, I think some of that is outdated in terms of the emerging market aspect. Also, I think unless you're very old and very near retirement and you just don't want to take any risk at all, do not put substantial amounts of money into bonds or bond funds, bond ETFs, because the return is just not there on those. They really don't appreciate much in value compared to market ETFs like a SPY or a QQQ, right? So that's where most, if not all, of your money needs to be. Again, unless you're trying to really protect yourself, like if you don't want to put any money at risk at all because you may need all of your money soon, then maybe be heavily invested in bonds. But for most of us, we shouldn't even be thinking about bonds as long-term investments. And while I think, just holding shares of SPY is a perfectly safe investment if that's your one investment, I do want to give you the other side of the argument, because there will be some people that will disagree a little bit with this. What is the danger of holding just SPY? Well, some people will say, well, SPY, just the ETF itself, it's too volatile. It's too volatile of an investment, because what happens when the market has a sudden downturn, a crash or a lengthy bear market? Well, that's always a risk. That's a risk with any investment. So I really don't see that as something to be fearful of. As far as, yes, there's volatility in the market, and that's why SPY has a nice return as well, right? To make any money, you have to take some risk. And for me, holding shares of the S&P 500, right, that is an acceptable amount of risk. Yeah, I'm going to average about 10% returns annually. I'm almost guaranteed to make money in the long run. If I hold on to those shares long enough, I'm going to make some money. Yeah, there are going to be some ups and downs. When I'm looking at my account, I'm going to see some big up days and some big down days, but that's part of the game, right? But I'm not too worried about the volatility as far as big swings, as far as unrealized P&L, because it's all about the end game. It's all about what I end up with 10, 20, 30 years down the road. You also will have some people criticize that SPY isn't volatile enough, oddly enough. And some people, say, hey, I just can't make enough on SPY. It's too safe of an investment, right? Some people are actually trying to make a quick jackpot, right? They're trying to triple their money or quadruple their money in a short amount of time. You just can't do that holding on to shares of SPY, right? They want to take very risky gambling style plays, and that's not where I'm at all. I think anything that's more volatile than just holding shares of SPY is a very dangerous game to play. One of the examples I often get asked this question is, hey, would it make sense for me to take 10, 20, 50% of my total income and just sink it into whatever favorite cryptocurrency, the flavor of the week as far as cryptocurrencies, and just sit on that thing for months or years and see where it's at, 5, 10 years down the road? No, that is very dangerous. That is, in my opinion, that's straight gambling. That is not a safe investment because there's no track record with that thing. I know what SPY does historically. I know you can set a watch to it practically, right? So again, I understand some people do want to gamble a little bit, but if you do something like that, do it with a very, very small amount of money, and it better be an amount of money you're okay losing entirely, right? For passive investing, typically this is money that you're going to depend on at some point for retirement. So I would not invest in anything that's more risky than SPY. Another criticism you will sometimes hear about people that just hold on to the S&P 500 is that it's the S&P 500, but you're at risk with certain sectors, right? Can I just pick various sectors that will outperform each year? Maybe this year the financial sector will do real well, and the next year consumer staples will do really well, and the next year maybe energy, that sector will have a crazy year. And can I just pick and choose which sectors, and how to weight various sectors more or less? And I understand why some people want to do that. Some people imagine that they can predict the market, right? They can predict which sectors will outperform or underperform. I can't do that, all right? And I honestly don't think you can do that either. But if you want to try, you're certainly free to do that. I think it's dangerous to play that game. Again, just invest in the whole market. In this case, the S&P 500, right? Just invest in the whole market. Trying to pick and choose sectors to overweight or underweight is a dangerous game. And one final thing I want to mention is that when it comes to long-term passive investments, some people will ask about things like gold and silver, the precious metals, right? Those are not good long-term investments. As far as their historical track record, it's nowhere near SPY, right? So again, I understand people want to diversify. Some people really, they have this mindset where I can't just be in SPY. I have to have some gold, I have to have some bonds, I have to have some emerging markets and some small caps. I think, again, that thinking may have held some truth decades ago. These days, in my opinion, SPY, perfectly safe investment. Yes, just holding SPY, I think, is a diversified portfolio. Food for thought. Peace, guys.